evening. This is Ruby Velasquez with MRB Financial. Thank you so much for joining us on this beautiful monthly for our topic of the week on our YouTube channel. After you watch today's video, don't forget to follow us, subscribe, like, and share this message with those around you who may benefit from obtaining this information today. You may find us as MRB Financial on Facebook, YouTube, Anchor, Spotify, LinkedIn, and Instagram. If you have any questions for us, please do not hesitate to send us a message. So let's get on with our topic of the week. This week, we're going to talk about the fair tax. The purpose of it is to promote freedom, fairness, and economic opportunity by repealing the income tax and other taxes, abolishing the Internal Revenue Service, and enacting a national sales tax to be administered primarily by the states. The fair tax is a national sales tax that treats every person equally and allows American businesses to thrive while generating the same tax revenue as the current 4 million word tax code. The fair tax plan is a 23% sales tax that would replace the current U.S. income tax. Since it is simple, it would reduce the headache of filing your taxes at the end of the year. And it would also raise a tax burden of 90% of taxpayers, while only the 10% of incomes will see a tax cut. The introductory rate attached would hike taxes on residents and businesses with incomes of over $250,000. Meanwhile, low-income residents will see a tax reduction of $6 while still paying the highest tax burden in the Midwest. So to give you more on that, that is really what it was supposed to do. Obviously, it didn't pass because, a lot of people didn't agree with the implementation piece of it, the process of it. Everyone said, this sounds like a great idea, but what about these things? If we're getting rid of the IRS, who are we going to replace it with? There are other related agencies who take part into this, which is the Treasury Department, the Social Security Administration, and the Sales Tax Administration. The ones who are the most affected as well are those in the lowest income brackets, instead of the folks in the high income tax brackets, as they will have ways around to expense out business expenses if not done properly, or if they find a loophole. Therefore, they will still be avoiding tax payments. So this just doesn't go with the purpose of it. Initially, those primarily affected are the senior citizens as well, as they have been paying into the tax system and they have a fixed income. It's not like they're going to get any more, but they're still going to be responsible for right now they're saying it's a 23% estimate that they are looking at based on the CPI, which is the Consumer Price Index, but it would actually vary on the expenses of each household, which it could go up as high as 67%. So think of, all those folks that they're not going to get any money, additional money from their income. They won't be taxed at flat rate that we are currently at, but now you could estimate that they're taking 23% from your taxes. What they're basically saying is we have to be able to get the same income in revenue that we are currently getting right now. And just the way that the numbers are working out, they're not making it happen. The pros and the cons are, it eliminates the annual tax preparation headache and costs, and then it eliminates the IRS. It boosts the income and possibly consumer spending. But all of these things, the advantages are going to be replaced with other organizations, like the IRS is going to be replaced by the Sales Tax Administration. They're going to have the same duties and responsibilities. It's just that now they're going to be collecting the taxes as you make purchases. There's a whole list of. I'm going to go ahead and attach the link that where you could obtain the actual bill, so that you could look into and see all of the actual details that it goes into. So all of these agencies, they eventually have to follow some type of rules. So it's not like we're not going to have a reporting agency. So a reporting agency will be in place. The disadvantages is unfair to seniors, as we stated, as they have already paid income taxes. The new agency that we talked about will need to reinforce all of that. And the sales tax rate will be prohibitively high to replace the lost income. So it's not, there's a lot of kinks that they got to work out on it. So the next time this law comes around, these are the things for you to look at to see how it does affect you. Because if you're not earning more income, but at the end of the day, you're still going to pay the same tax or more, look to see how that affects you. Because as you saw, business owners will have the upper hand to take more deductions. So it's not really going to do what the intention was meant for. This brings me to the end of our presentation. I hope that this information brought clarity to your financial house. Don't forget to like, follow us, and subscribe to our medias. And please share this message with your friends and family to help them obtain information, as you never know who it may be bringing, how this information may be helpful to them. Thank you, and we will see you next week. Bye.